Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. It's the start of a new trading week as well as the second week of February, and we are here to give you an overview of what was happening last week and what to look out for in this particular week. In the first session of today's programming, we will be showing you the statistics from the Nairobi Securities Exchange. What was up, what was down, what was driving performance. We'll also give you an overview of some of the key corporate news that were driving performance over the last week. When we take a break and we come back, we will be speaking to the team members of NABO Capital, Mr. Isaac Kamau, who is an investment associate at NABO. He'll be taking us through the investor sentiments when it comes not only to Kenya, but looking at the broader capital markets across sub-Saharan Africa. Isaac will also be walking us through sentiments that will be determining the remainder of this month's performance and, more importantly, how he expects the quarter to close. That's a discourse that we will have with him virtually via our Zoom meetings, but we would like you to engage with us and tell us what questions you would like us to front on your behalf, as well as your commentary or any insights that you have in as far as investing in the Nairobi Securities Exchange or across capital markets in Africa. Without any further ado, let's take a look at what was happening on the Nairobi Securities Exchange all of last week. By virtue of an overview, we did see that market turnover was actually up 24 percentage points to close at 3.13 billion for that particular week compared to the previous week. The key differentiator for that week was the fact that the domestic investors, largely the local institutional investors, were actively back in the market, picking up stocks. We did see a rally and demand for the blue chips, more specifically Safaricom, which crossed the 37 shilling mark last week, closing at 37.2. This particular company continues on its upward trajectory, largely driven by local and foreign demand, given the fact that it has a technological base in Kenya, is looking at Ethiopia as an extended market, and has already started charging for M-Pesa transactions. These are all positives, but the sentiment does come across that the fact that it's trading at 37, it's more or less reflecting the future value, and we are continuing to and expecting a bit of profit taking at this point in time. However, for the long-term investors, they continue to see value at 37, and we see that it could probably be trading range-bound for this particular week. Let's take a look at the other statistics from the NSE by virtue of the indices. We did see some of the indices were up, some of them were down. The NSE 20 index was slightly up a percentage point this week compared to the previous week. The other indices were more or less flat, with nothing much to trigger performance over that particular week. In terms of some of the trades that we did see, we saw a recovery in the likes of East African breweries. This company had touched a low of 148 shillings per share in the month of January. Now it is trading at 162. The recovery has been driven by the fact that it did not see much of a dent when it comes to its revenues and operations within the region. This company announced its half-year results 1.5 weeks ago. The bottom line was down 47% on a year-on-year basis, whereas revenues were only down 5 to 6 percentage points for that period. This company made a one-off payment with regards to its tax obligations. Investors are looking at this as a long-term buy, largely because of the impact of better performance in the plants of Tanzania and Rwanda, and the expectation of a recovery when it comes to consumption and demand in Kenya. It's currently at 162, looks like it could probably gain another 5 to 10 percentage points before the quarter is out. Over and above that, the banks were more or less static over the week. We only see a bit of a downside on Cooperative Bank, which closed at the 12 shilling mark, having touched a high of 12.6. The usual banks, Equity and KCB Bank, crossed the 37 shilling mark over the last week, with a bit of demand coming in from the local investment market. Over and above that, the market remained muted. Domestic investors are in, largely looking at Safaricom and the blue chip companies. What do we expect this week? This is something that we will be discussing with Isaac Kamau to give you an overview of what to expect. Over and above that, our Harvest team, which collects data and helps us be able to give you better insights, has also collated for us the performance of the bond market as well as currency markets. This is coming up on your screen, just a performance of how the currency performed. That's the Kenya shilling against the US dollar, which my peers will be putting up on your screens as we speak. Again, not too much negative activity on the currency. I think we are waiting for that chart to come up. As we are waiting for that chart, we'll probably also be waiting to see if we get the chart on the bond markets and how performance looked like there. As we await this chart, last week, the government of Kenya, through the Central Bank of Kenya, was in the market for treasury bills as well as looking for papers, for the longer dated papers, that's the fixed coupon bonds. Every week, the government of Kenya is in the market looking for 24 billion. Last week, it raised 14.8 billion in this particular market, and the one-year paper, which is what we have been tracking, was at 8.7 percentage points. Over and above that, the government each and every single month does come into the market looking for longer dated papers by virtue of either treasury bonds or infrastructure bonds, all of this slated to actually be able to contribute funding for the government operations. Last week, the government was looking for 50 billion on 2 issuances, and out of the 50 billion, it was able to accept bonds worth 32 billion. If you were investing in the government of Kenya last week, you had the opportunity to put your money for 8 years or for 12 years. If you invested for 8 years, you got a return of 11%, and if you invested for 12 years, then you got a return of 12.2%. Some interesting returns there, and also alluding to the fact that liquidity is not as robust as it was in prior periods. Cash flow isn't flowing within the economy, and we are beginning to see a bit of an uptick when it comes to the interest rates that investors are demanding if they're going to put their money with the government, especially for the longer dated papers. We take a brief break. When we come back, Mr. Isaac Kamau, who is a senior associate for the investment team at NABO Capital, will be joining us virtually to discuss local markets as well as sub-Saharan markets and give us a sense of how Kenya is performing vis-a-vis these other markets, and more importantly, what does he see for the next couple of weeks and the remainder of the year. What questions would you like us to ask Mr. Kamau on your behalf, and what are your sentiments when it comes to the investment outlook, especially for equities in this region? Our SMS lines are open. Our social media lines are also open. That's at Metropole TV or at Mbithe Mwema on Instagram, Twitter, Facebook. We would like to hear your thoughts and your commentary, as well as to be able to take your questions on your behalf. Thank you, and see you after the break.